Welcome to GEPL Capital's another market outlook video. I'm Sanket Bendre from the fundamental research team, and in today's video, we will be discussing some of the key highlights from this week, as well as the inflation data that came till the April of 2026, as well as net FI and DIS inflows and outflows that came over for the last few months. So let me share my screen and we will start the video right ahead. Okay, now I hope my screen is visible. Okay, so the key highlights from this week will be the fuel prices within India. So if we see over the last few days, that is between May 15 till May 29th, the fuel prices have been increased by 7.5 per liter, and this is the first major increases in the last 4 years. And the price revisions occurred over the four distinct hikes to compensate for the state-run OMCs, that is all marketing companies, daily losses from the elevated global crude oil prices. So if you see OMCs companies have been facing a lot of losses due to this rise in crude oil prices. So as a result of that, an initiative has been taken by the government of India to compensate these losses by taking fuel prices hikes, and this was done by about approximately 7.5 rupees per liter. The next will be on the USD INR front. If you see, so the RBI had announced $5 billion of USD INR buy-sell swap auction, which was scheduled for May 26, 2026. With the rupee under pressure from rising crude prices, geopolitical tensions in West Asia, and sustained foreign investor outflows, the central bank stepped in by selling dollars in the market to stabilize the currency. So this swap auction witnessed strong participation, with the auction getting nearly two times oversubscribed. So as a result of that, we saw that rupee USD INR falling by approximately 2 rupees, that is close to 95.2, and which saw a high of 97. So overall, that led to an overall positivity in the markets, given this swap auction done by RBI. The next will be on the agriculture, energy, and infrastructure front. So the cabinet has approved key measures across the sectors, including a record MSP outlay for 26-27 Kharif marketing season. Further, they have also approved 37,500 crores of incentive scheme for coal gasification, supporting energy security and reducing import dependence. Further, they have cleared approximately 20,600 crores for the Sarkej Tolera semi-high-speed double lane corridor. So all in all, we are seeing spending by government in the agricultural as well as energy and infrastructure fronts. And this was done in the last 2 to 3 weeks. So the next will be on the inflation data. So this is the WPI inflation on the top side, and CPI inflation, that is the retail front. So if we see, retail inflation saw a major dip of 0.3% in the month of October, and it has been increasing over the last few months. And in April 26, it has been close to 3.5%. Similarly, on the W wholesale price index front, if you see, it also saw a negative 1% in the month of October, which was the lowest front in the last 13 to 14 months. And since then, it has been increasing, and with the April month seeing the highest of 8.3%. So all in all, elevated crude oil prices is leading to increase in wholesale as well as retail inflations over the last few months, that is 2 to 3 months. So retail petrol prices and diesel prices have started increasing from May 26, and as they are likely to impact further retail inflation in the upcoming months. So we might see further rising inflation data for both WPI as well as CPI data inflation front. The next will be on the FIs and DIs flow. If you see, FIs remained the net sellers for the second straight month in the month of April, weighed down by rupee weakness against the dollars, inflation concerns, and the prolonged West Asia conflict. Further, FIs were net sellers of Indian equities worth approximately $609 billion in the month of April, and they continued their selling streak in the month of May with net outflows of 345 billion INR. However, the pace of selling was moderated on a month-on-month basis. On the positive front, if you see, DIs continued to lend strong support to the market, recording inflows of 511 billion rupees in the month of April and 621 billion till date of in the month of May. This was driven by robust SIP inflows within the mutual funds. So The negative in the FI have been supported by positive flows in the DIs. So overall, the Indian markets have been on a consolidation phase over the last 3 months due to this selling and buying from both the institutions. So I guess that's all for this video. I hope you like this video and do like